Hello friends, in the current video we will understand the concept of joint venture second method when the concept is already you are aware joint venture. Under that second method we will understand that when no separate set of books of accounts are maintained. Books of accounts are maintained. So generally what will happen here, in the earlier video we understood that the when separate set of books of accounts are maintained, but now in this current video we will try to understand when there is no concept of when no separate set of books of accounts are maintained, how to do the process of accounting, right? Basically, as you are already aware what is joint venture, I have explained you in the earlier videos, but precisely you try to understand that suppose A and B, two people are doing joint venture individually, they are co-venturers and they are presumed that they are doing joint venture collectively. So generally what happens here in two situations, one is if the size of the joint venture is small, if the size of the joint venture is small, and if these two co-venturers are residing in different geographical areas. Situation one is if the size of the joint venture is very small, and if these people are residing in different geographical locations, then it is not appropriate to maintain the separate set of books of accounts, right? So separate set of books of account is not possible in these two circumstances. The reason is if these people are doing small joint venture, then maintaining separate set of books of accounts will keep these people, the co-venturers, in incurring additional cost towards the maintenance of books of accounts, towards the clerical staff and accounting staff salaries, right? So in order to reduce this cost, better to opt for the second method, that is no separate set of books of accounts are maintained. Presume that if these people are residing in different geographical location, then also it is highly difficult to maintain a separate set of books of accounts. So in these two situations, generally the co-venturers or the joint venture will opt for going ahead the joint venture with when no separate, in the sense they are not maintaining any separate set of books of accounts. Instead, then what they will do, they will maintain, suppose A is already a businessman, B is already a businessman, these people comes together for a particular joint venture, right? In this case, B might be having his own office, might be doing his own business. Besides this, he might be doing joint venture. So what will happen when A is having his own business and office, then he might be maintaining some accounting staff and clerical staff. So what he will do, already existing staff services will be availed, will be used, and the A will maintain the accounting record of joint venture with B even, without paying any additional cost to the salaried employees. Already he is paying salary. So what he will do, he will seek the services of the maintenance of the joint venture with B even accounting. What B will do, he will himself separately maintain in the same way the accounting of the joint venture with A. So these people are individually maintaining in their personal accounts the books of accounts with joint venture with other parties. So what kind of accounts these people will maintain? A will prepare two ledger accounts. One is joint venture account and another one is A will not maintain his books of account, in his books of account his account. Instead, he will maintain other parties' account, B's account. So this is joint venture is a nominal account maintained to calculate profit and loss on joint venture, whereas B account is a personal account maintained to calculate amount payable or receivable from B, right? In the same way, B will maintain joint venture account with A and A's personal account. Clear? So he will maintain joint venture with A and A's personal account, whereas B was maintaining joint venture with B, whereas A was maintaining joint venture with B and B's personal account. So like this, these people will maintain the books of accounts. Clear? Now, presume that if there is a C, one more partner, one more co-venturer, then A will maintain joint venture with B and C, and B's personal, C's personal. B maintain joint venture with A and C, and A's account and C's account. C will maintain joint venture with A and B, and A's account and B's account. So like this, if the joint venture co-ventures are enhanced, number of people are enhanced, the accounts will be maintained. Clear? Now what kind of a journal entries are passed? See, basically try to remember that while passing the journal entries, we must understand in whose book we are passing the journal entries, right? Suppose presume that we are passing the journal entries in the books of A as an example we'll take. So what will happen when cash received from B? When cash received from co-venturers, presume that, then in this situation what will be the entry? A will write in his books of account, that is cash account data to B's personal account, that is B's account, you can say. Clear? Then when A purchase any material, when co-venturers, that is A is purchasing here, when A is purchasing any material, what will be the entry? That is, why he is purchasing material? To use in the joint venture, hence it is an expenditure for the joint venture. So the entry would be joint venture with B account data or joint venture account data to cash, right? When A provides material from his own stock, when A is providing material from his own stock. Here what is doing? He is not purchasing any material. Instead, A is providing from his own business, the existing business, the material for the joint venture. In such a case, the entry would be joint venture account data to purchases account. Why purchases? When material purchased by A, what entry would have passed? He would have passed the entry that is purchases account data to supplier or cash. Now that material he is bringing, so purchases account should be reduced. How it will be reduced? By crediting. So debiting which account? Joint venture account. So this is the basic journal entry when material supplied by co-venturer from his own stock, right? Then next, here see the entry for when purchases are any material or any payment. Suppose any payment he makes, even then the joint venture to cash. Clear? Now the entry would be material supplied, material or anything supplied by B here. So supplied by B, then what is the entry? Material supplied by B. When A supplied the material, we wrote joint venture to purchases. When B is supplying the material, what entry will pass? Joint venture account data to B's account. Bear in mind, we are passing these journal entries in the books of whom? A's account we are passing. That is the most important thing. If it is in the books of B, then the entry would be joint venture to purchases. The entry will get changed. Right? Then payment made by any payment made by B, co-venturer. The entry would be joint venture account data to B's personal account. Clear? Then what will happen? When material sold by A. When A sold the material, what will be the entry? Cash account data to joint venture account, as it is an income for the joint venture. Clear? So in this way, when material sold, the entry would be joint venture account data, cash account data to joint venture. Right? Next, when material sold by B, then the entry would be B's account data, that is personal account data to joint venture. Bear in mind, joint venture should be credited as a income for the joint venture. Right? Then next entry would be any balance of material taken over by co-venturers. Balance of material taken over by A. A has taken over. So when he is bringing the material, what entry we passed? Joint venture to purchases. When he is taking over the material, then the entry would be reversed. That is purchases account data to joint venture account. In the same way, material taken over by B, presume that, then the entry would be B's account data to joint venture account. Clear? So like this, we need to pass the entry. Next, once this entry is done, if profit on joint venture, then profit on joint venture, then joint venture account data to P&L account, A share to B's account, B share. Right? If loss, this entry would be reverse. That is P&L account, B's account to joint venture. Suppose any payment made to B, the entry would be B's account data to cash. In the same way, any amount received from B, the entry would be cash account data to B's account. So like this, the journal entries will be passed with regards to joint venture when no separate set of books of accounts are maintained. Right? Now we will try to understand one question with the help of which we can easily learn the concept. Right? Now, see this question. A and B entered into a joint venture to sell a consignment of timber, sharing profit and loss equally. A provides timber from his stock at mutually agreed value of 5,000. He pays expenses amounted to rupees 250. B incurs further expenses on cottage and storage etc. amounted to rupees 650 and received cash for sale of 3,000. He also takes over goods of the value of 1,000 for his use in his own business. At the date of close, A takes over the balance of stock in hand, which was valued at 1,100. Prepared joint venture account and co-ventures account in the books of A. Clear? So by reading the question, when we were asked to prepare ledger accounts or journal entries in the books of one of the co-venturers, then it is no separate set of books of account. If it is given open the joint bank account, then it is a separate set of books. So like this, you need to recognize which method it is. Clear? Now we'll take up the problem where we will work out this question. Right? So we'll try to work out this problem. So as I have explained you journal entries already, then what we need to do, we need to just prepare the ledger accounts. Ledger accounts in the books of A. Right? So we'll divide the paper into two parts. Right? As I told you, the accounts are maintained. That is, so first in the books of A we are doing, right? So basically already you are aware how many ledger accounts will open. Two ledger accounts. One is joint venture account. Another one is co-venturer's personal account. Right? So I have drawn, first one is joint venture account and the second one is co-venturer. Who is the other co-venturers in this case? That is B's account. This is joint venture account. I am writing abbreviation, but in examination you should not use abbreviation. Here I am roughly drawing the tables, whereas in examination you should draw properly. Right? You must draw joint venture account, debit, credit, all the things, particulars, amount and everything you must draw. But here due to the paucity of time I need to minimize the time, hence I am not doing all those things. Right? So but you need to do. So first, so the question, A and B entered into a joint venture to sell the timber and share profits equally. Right? Proportion is equally. A provides timber from his stock at an agreed value of 5,000. So what A is doing, A is providing the material from his own stock at a valuation of 5,000. As I told you, when A is providing material, what will be the entry? The entry would be joint venture account data from where he is providing to purchases. So in joint venture we need to write to purchases. So the amount of purchases 5,000 is the agreed value of material he is supplying. Right? So when he makes the payment, then joint venture to bank we write. Clear? Or cash we write. So he is supplying from his own material. So as is from his stock at a mutually agreed value of 5,000. He pays expenses amounted to be 250. So A himself is paying the expenditure. So we are preparing in the books of whom? A only. So what we write? To cash. How much expenditure A is paying? That is 250 rupees. Clear? Next. Then B incurs the further expenses on cartage and storage amounted to be 650 and received the cash for sale. So B is incurring the expenditure. Now bear in mind in whose book we are preparing? In the books of A. So when B is incurring the expenditure, we write to B's account. How much? 650 expenditure he is incurring. Am I right? Yeah. And B himself is selling the material. When B sold the material, what entry we pass? B's account data to joint venture. So already we have incurred the expenditure to B's account. We have written 650 and we have opened B's account even. So in B's account we write by joint venture 650. Clear? And now sale of material. B is selling the material. So we write by B's account. At what price he is selling? For 3,000. And in B's personal account we write to joint venture 3,000. Clear? So like this the sale entry will be passed. Once this is done, he also takes over refers to here B. He also takes over the goods of the value of 1000 for his own use in the business. Who is taking over? B. So whenever material is taken over by B, it should be credited. So by B's account, how much material he is taking over? The value of the material he has taken over, that is 1000. So in the joint B's account to joint venture 1000. Clear? So like this, when material is taken over by co-ventures, we will be recording on the credit side of the joint venture and co-ventures personal account debit side for his own use. At the date of the close, A takes over the balance of material in hand for 1100. So A is taking over the leftover material. So again it should be credited by, when A brought the material, we wrote purchases. When A is taking over the material, again we write purchases. That is 1100. Right? Am I right? Right. So like this, the co-venture, joint venture is done. They brought the material 5000, A incurred the expenditure, A brought the material 5000, A incurred the expenditure, B incurred the expenditure, B sold the material, B taken over the balance, closing material, some part of the closing material and balance of the material, A taken over. Right? Like this, we have recorded all the transactions based on the interest. Now we will close the account. First, we need to close the joint venture account. When you close the joint venture account, what you are getting? 3000, 4000, 5100, right? So here we are getting more value, 5678. So 5000, how much this is? We'll make a calculation. 5000 plus 250 plus 650. So 5900 it is, sorry. So we write both the side 5900 and balancing figure we are getting 800. So by P&L account, whose P&L account? That is A's P&L account, the loss. How much? 400, as these people are sharing equally. By B's account, 400. Collectively it is 800. Now B's account, what we write? To joint venture, the loss 400. Am I right? Clear? So like this we record the transaction. So here we are incurring a loss of rupees 400 on the credit side, 800 on the credit side, that we have distributed equally as we are preparing in the A's book. So we have transferred A's share to P&L account, his P&L account, and B's share to B's personal account, right? Now close the B's ledger account. So 4,400 credit side we are getting, 4,400 minus 650 rupees. So we are getting 3,750 rupees. We write by, what did he say? He did not say anything regarding the settlement of the amount. So by balance carried down. This is the balancing figure and this is the balancing figure of profit, right? So what does it mean? This will be the amount receivable from whom? B. This will be the amount receivable from B. So like this we need to prepare in the books of A. In the same way we will prepare in the books of B also. So now here itself I will show you how to prepare in the books of B. Right? I hope I am making you understand. Please concentrate and reproduce properly. If you have any doubts, just put in a comment. I will certainly reply to your comment, right? Without any further hesitation and delay, right? So if delay takes place, don't mind it and wait. I will certainly give the reply. Right. Now we are writing in the books of whom? In the books of, this is in the books of B we are writing. So this account is a joint venture account. This account is A's account, A's personal account. Clear? The same transaction will be recorded with a different perspective, in the perspective of B. Right? So when joint venture started, A supplied the material. Now we are writing in the books of B. So what we will write? To A's account. How much? 5,000 is the agreed value. In A's account, what we write? By joint venture 5,000. Clear? So instead of writing purchases as we are writing in the books of B, so we write A's account. Then A incurred the expenditure to A's account. How much? 250. So in A's account by joint venture, 250 is the expenditure. Clear? Now B incurred the expenditure 650. So as we are preparing in the books of B only, hence what we write? To cash 650, and we don't pass anywhere else because it will be credited in the cash account. Clear? Now B sold the material for 3000, so we write by cash. How much? 3000. And B takes over the material worth rupees 1000. So B is taking over, hence by purchases. How much? 1000 will be required because B is taking over the material. When he takes over the material, it goes to his purchases account. Clear? Now A is taking over the material. So then by A's account, how much? 1100. In A's account, what we write? To joint venture, 1100. Clear? So this is the way of posting. Once this is done, you bear in mind that we did not change the values. See, in joint venture account, there is no change with regards to the values. Values are remain same when you see in the both, but names are changed. Here we have written purchases in the books of A. Here we have written A's account in the books of B. Here we have written cash expenditure. Here we have written A's account. Here we have written B's account, but here we have written cash account. In this way, we have changed the names. That's all. The numerical values are remain same in joint venture, whereas personal account it will change. Right? Now close the joint venture account. So profit or loss will remain same. There will not be any change. Right? So the 5,900. Again 800 rupees loss. By A's account 400. By P&L account, that is B share 400. Clear? So A will write 2. In A's account we write 2 joint venture 400. So like this we will post. So this P&L will be goes to B's P&L account. Right? This amount belongs to this loss of there. B will goes to B's P&L account. Clear? So like this we have to write the transaction. Once this is written, we need to close the joint venture co-venture's personal account, that is A's account. So when we close 5,250 both the side, from that 5,250 if you deduct how much, that is 1,500. So 3,750 to balance carried down. So this is the balance if you are 750 it is. Right? So like this we need to write. So B is writing that this will be the amount payable to whom? A. And A was writing this will be the amount receivable from B. So as the question did not mention anything with regards to the payment, hence we are writing it as a balance carried down. Clear? So in the same way we need to work out the problems. Clear? So for more questions, more problems, as this what we call video was containing explanation and one problem, basic problem we did. For further problems I will make one more video. Right? Please do subscribe my channel, and if any doubt, do put a comment whereby I can able to give you answer, and subscribe my channel to provide more qualitative videos. Thank you very much.